Hey YouTube, welcome back to another video. In this video, I want to talk about Alibaba and do an intrinsic value analysis on their stock and talk about a little bit of the recent news surrounding Alibaba. And then I'm going to use a discounted cash flows model to try to figure out the intrinsic value of the business so we could figure out from a value investing perspective what a good purchase price would be for us, including a margin of safety of 30% and 50%. To get a good return on our investment long term. So the first thing that I want to talk about is recently on October 10th, 2021, Charlie Munger's firm doubled down on its Alibaba investment. Charlie Munger, for those of you who don't know, is Warren Buffett's longtime partner in Berkshire Hathaway, and he's also the chairman of his own firm, which is the Daily Journal. So we can see that his own portfolio in the Daily Journal, he had 302,000 shares or American depository receipts of Alibaba at the end of September, which essentially means that in the third quarter he bought an extra 136,000 shares or American depository receipts. So he's clearly very bullish on Alibaba in the future, and this is without surprise because he has voiced his admiration for the Chinese economy in the past. So it's no surprise that he would do something like this and invest and buy at the bottom, looking for decent returns in the long term. We can see right here it says Daily Journal bought more Alibaba ADRs during a time of weakness. They fell 35% in the third quarter. While the S&P 500 index was flat, Chinese regulators announced new rules during the period, unnerving investors. Alibaba invested in a self-driving startup. We also recently spoke with an investor on opportunities in China. The Daily Journal initiated a position in Alibaba, buying 165,000 Alibaba ADRs in the first quarter. Munger told us that the Daily Journal bought Alibaba stock with cash equivalents that would usually be invested in treasury bills. So maybe buying Alibaba's, or not even just Alibaba's, but buying any common stock wouldn't really be as good of a safe replacement for cash or cash equivalents. But at a discounted price like this, Charlie Munger clearly thinks that long term this is going to be a very good investment. And in the Daily Journal, which is his investment fund, Alibaba is now his third largest investment holding by value as of September 30th. With Bank of America and Wells Fargo being the other two largest holdings. So clearly Charlie Munger is very bullish on Alibaba, but he isn't the only billionaire who is voicing his opinions on Alibaba's stock. There are a couple of billionaires who are bearish on Alibaba's stock, including George Soros, who is a billionaire out of the United Kingdom. We can see right here from his quarterly statement in the U.S. Securities and Exchange Commission, the SEC, his fund sold nearly all but 60,000 Alibaba shares valued at $4.88 million. At the end of March, the fund still had 4.4 million shares valued at nearly $370 million. So he went from 4.4 million shares down to 60,000 shares, from $370 million down to a $4.88 million stake in Alibaba. Similarly, the Tiger Global Management Investment Fund, which is a fund out of New York City, reduced its stake in the Chinese group from 6.7 million shares at the end of March to just 93,494 shares 3 months later, filings show. So these two investment groups, Soros being the billionaire in this article, they are clearly very bearish on Alibaba. And on to other news, JP Morgan now supports Alipay to provide card payment services for Alibaba.com in the US. And in the past, they've also voiced that they think that currently China is on sale and that it's a very appealing investment. So they are clearly slightly bullish on Alibaba, certainly more so than George Soros. And lastly, I want to talk about Chamath Palihapitiya, who is the CEO of Social Capital. He believes that China is headed for some volatility, and also in a video he claimed that right now China is a place he would read about but not invest in. So he's definitely a little bit more cautious There are some investors who are looking at it from a fundamental perspective, taking a look at Alibaba's financials, which is something else that I'll look at in this video. And they're saying to themselves that Alibaba's financials are pretty strong and that in the long term, they think that it's going to be a strong investment that can produce really good returns. But then there are other investors who are looking at it from the perspective of the Chinese Communist Party and their grip over the free market in China, and how they're a little bit worried that Xi Jinping might not care about the free market or about the stock market or the performance of Alibaba stock. And so they're looking at it from that perspective, saying that it might not be a good investment, a safe place to invest in. You can see he says really needs China to be an investable place, and clearly some investors don't see it that way. So now I'm going to open up my discounted cash flows model, my intrinsic value calculator, so that we could use Alibaba's statement of cash flows to try to figure out what the intrinsic value of Alibaba's business is, so that we could see what a good purchase price would be for us from a value investing perspective. So the first thing that I'm going to want to get is the growth rate for years 1 through 5. I can easily find that by just going to Yahoo Finance, going to Alibaba and clicking on analysis, scrolling down, and we can see the growth estimates by analysts. Keep in mind that using a discounted cash flow model, there are a lot of assumptions when it comes to trying to value a business like this into the future. Obviously, we're going to be assuming growth rate, we're going to be assuming future cash flows. So there are a lot of assumptions. It's not a comprehensive tool that we can use to value a business perfectly. However, it is a tool that we can use that many value investors like Warren Buffett and Charlie Munger use on a regular basis. So we can see that for the next 5 years per annum, analysts predict their growth estimates being 2.55%. So we can put that in right here. And for years 6 through 10, I'm just going to be a little bit more conservative and say 5%. The discount rate is the expected rate of return that we are looking for to get on our investment over the next 10 years. The terminal value is just a hypothetical, saying if we were to sell Alibaba in year 10, that we would sell it for 10 times free cash flow at that point, because when we're valuing a business, we want to look at it from the perspective that we're buying the entire business. And the year 1 free cash flow, I can easily find that by going to TradingView, which is a stock screener that has every stock or almost every stock from the NASDAQ and the New York Stock Exchange. And I just go to financials right here, go to cash flow, scroll down, and we can see that for the year 2020, Alibaba's free cash flow was $27.82 billion. 27.82. Now to look for their net cash and net debt, we can easily find this by going to Alibaba and clicking on statistics. Scroll down a little bit. We can see from their balance sheet, total cash, $483.35 billion. And we're just going to put an equal sign here, put minus, and figure out what their net debt is. We can see their net debt is $181.24 billion. Okay, so net cash minus net debt is $302.11 billion. Stock ticker is BABA, and shares outstanding, we can see that right here. Implied shares outstanding is, shares outstanding 2.71 billion. Okay, so after plugging in all of these values, we can see using the intrinsic value calculator what the predicted free cash flow would be for the next 10 years. And we can see right here, present value of free cash flow in billions is 345 billion. Intrinsic value in billions, 647 billion. And then we just divide that by the shares outstanding, which is 2.71 billion. We get intrinsic value per share of $238.82, with a 30% margin of safety being $167 per share, and a 50% margin of safety being $119 per share. Now, to compare that to where Alibaba's share price is right now, we can see that their share price is currently trading today at $167.97. So at the current share price, what it looks like based on this intrinsic value calculator, the discounted cash flow model, we can see that Alibaba is currently trading pretty much exactly at a 30% margin of safety, which is exactly the kind of price that a value investor would want to buy at if they were making a decision solely off of this discounted cash flows model. We know that past value investors like Benjamin Graham, who is the author of The Intelligent Investor, he's big on buying businesses at a share price using a margin of safety, so that if our intrinsic value estimates of the business at $238 per share are wrong and Alibaba isn't worth that and it's worth less, we buy them at a margin of safety. That way, even if we are wrong and our estimates are too overvalued, then we still stand to make a good return on our investment long term because we bought it at a margin of safety relative to the business's current free cash flows. So I think from a value investment perspective, Alibaba, based on the discounted cash flows model, seems like a buy right now. However, I do understand the sentiment of other billionaires like George Soros and of Tiger Global Management Investment Fund. They're not really saying that Alibaba is a bad business. Oh, sorry about that. They're not really saying that Alibaba is a bad business from a fundamental point of view. They're just saying that they would feel uncomfortable investing in China, particularly because of the authoritarian regime and China's Communist Party and their government intervention into the free market. So let me know what you guys think about this in the comment section below. I would love to see if you guys think that Alibaba is a good investment or not. Definitely leave a like on this video. It helps the algorithm. It helps this video get recommended to more people who are interested in videos like this. Subscribe to the channel if you haven't already, and I'll see everyone in the next one.